You got the wording.
They're my heart, RS. Both of them been my mentors.
Seeked all their knowledge, asked them questions. They taught us so much. One of the things that I'll share with you is, how many of you guys are homeowners by chance? Okay, a couple. 23 years, 28 years, retired Navy Master, but we learned more about the VA home loan through our licensing than we did while we were in. There's a formula for the entitlement, and I know some of you guys brought notepads, so I'm gonna give you something to write in those, your notes. This formula is more important than any formula I learned in high school, anything mom and dad, anything boot camp, anything CFS, whoever taught me. And I'm gonna teach you this formula. So, when it comes to purchasing more than one home, it's all off county entitlement. So whether in Texas has one number for all the counties, which is 766,000. What I want you to write is county entitlement, county max entitlement limit. So wherever you're looking to buy a home, you're gonna go off county entitlement. Let's just say the county entitlement is 500,000. Let's use a simple number of 500,000. You're gonna take 500,000 and divide it by 4. 500,000 divided by 4 as well.
Without further ado, got Master Chief retired Escobar, Master Chief retired Ronald.
Hey, good morning.
Morning.
Hey, first and foremost, thank you for having us here. I haven't been here in like a couple of decades, so I was like, damn, it brings back memories, right? So a few things. We retired a couple of years ago, and being in the military for a long time, I realized that, you know what, helping a lot of folks succeed makes us successful as a master chief, right? So when we retired, I said we have to do something else to help folks out in the military because nobody did that for us growing up. Did you guys know that only 6% in the military used VA loan in the last 5 years? 6%. Okay? So think about it. 6 out of 100 used VA loan to purchase a home in the last 5 years. Do not let that happen to anybody. If your VAH is going up every year, your paycheck is going up every year, invest that. I invested my first home when I was in second class. Wife wasn't working, I was second class. I said, you know what, I don't want to rent. I don't want to stay in the military house. Nothing against that, but it's just my mentality when I was growing up. So I need to invest early. Make a long story short, I've been in my house for 19 years. I had a rental property, no problem, right? So use that VAH, invest it. We always say invest your VAH, do not waste it. So with that, you know, with that said, Master Chief, retired Escobar, my brother, take it away.
Hey, good morning, guys. Like they said, retired Navy Master Chief, 23 years. How many of you guys have seen the movie Step Brothers? Right? I probably watch like once a year. Remember when their mom and dad was like, hey, I need to get you, you know what, together and go get a job. So my brother and I, we've been best friends. You know, I was sailor of the year in a carrier on the Reagan. He was recruiter. He was instructor of the year at the schoolhouse. We met trying to redo the in-rate PQS, and we just hit it off. We've been best friends ever since. And like about a year before we retired, we're trying to figure out what we're going to do. We still want to help people, meet people. We felt like, you know, we really didn't want to do the 9 to 5. We really didn't want to pick up a GS or government job. Nothing against that. Nothing against any of that. We just want to be creative. We didn't want a ceiling, and so real estate was it. And so we interviewed with all the top brokerages you guys ever heard about. Keller Williams, Caldwell Banker, Century 21, Remax, Berkshire Hathaway. And we were asking them questions. We wanted to know about their training program, their mentorship program. We had this Navy mentality with us. Did you guys have a family culture? Or you guys are about your clients? Century 21 was a great fit for us because not only can we help people with their home loans and stuff, but we can do the real estate. So we have both licenses. You typically go to a realtor, they can only, they can only do one.
That extra bit that you really need to get the home that you want to purchase. Okay. Don't overdraft on your account within like that 3-month period that you really want to buy a home, because they're going to look at all your bank statements within a 60-day time frame. If anything stands out that's odd, we're going to have to just provide more explanations, which is going to make the home buying process a little more stressful for you because you have to provide more documents, and I know everybody loves sending more documents to the loan impact you, it's gonna make a big deal. Try to get over that 640 mark, the next increase is at 660, and then 680 and above, okay? Try to work on making your credit score as high as possible. It's gonna earn you the best rate, it's gonna cost you the least amount to get into a home. So make sure you prepare now for whatever you need to do to get your credit score. Really, you wanna get your credit score above a 700. But if you can't, 640 minimum. And then 660 you get a better rate, 680 you get another better rate, okay? And then obviously it goes up to 760 where you've maximized your potential on getting the best rate that's out there.
Go ahead. Yes.
What questions? Yes.
Is there a way to kind of calculate that yourself? Because I recently spoke with a agent, and she gave me my credit score, and it was pretty good. However, I also have a Parent Plus loan from college degree that wasn't really affecting that at all.
So
like
an
that
agent,
debt-
like a loan officer, did they pull your actual credit
Yes.
for all 3 trade bureaus?
I'm assuming she gave you your mid score.
Yeah,
Yeah.
cause yeah. So we get your mid score by pulling Equifax, TransUnion, and Experian, and then we take the mid score of
Yeah,
that.
so your question again was,
Basically, like,
you have
is there a way for me to know like a more accurate number if a big debt that I have wasn't taken into account in what she did?
Oh, I see what you're saying.
So simulation,
It's a Parent Plus loan.
yeah, so we do have simulators that if we say we eliminated that debt, that will tell us what your FICO score would be if you didn't have
It
that.
sounds like it didn't report yet though on the credit, I'm assuming it didn't report on your credit report.
No, he's saying that he wants to know what it is if it wasn't reported, if it would be higher, right?
Oh, yeah.
Yeah, so, you know, this is what I tell people, if you're doing loans for other people, like, if it's for your child, I mean, you can't avoid that. Some of those are on deferment plans, there is some stuff that we can work around. You're co-signing, you guys, if you're co-signing for other people, just make sure that they're making the payments themselves, because then we can show that, hey, this is being paid by somebody else in a different account, and then that can get excluded from your actual, it won't count against you. So, but yeah, I mean, we got
There is,
simulations.
there's a simulation that you can do and say, oh, if this happened, how much could your score potentially increase? And it may say 10 points, it may say 40 points. But whoever ran your credit would have to use that same credit.
She has that
report,
access to that.
and that can do that. It's an additional small charge, but yes, there are ways to do that, absolutely, 100%. Actually, you bringing that up also brought up, like what Georgina said. If you co-sign for someone, great, I would recommend not doing that. But if you do, but they're making the payments, we have to show 12 months of them making the payment out of their account from an account that you are not a part of. That is the only way that debt will be eliminated. So if you're co-signing a car for somebody and they can prove they're making it from their bank account every month, not they Zelle you and you make the payment, won't happen. You cannot eliminate that debt from your name, but they make it from their bank account, your name's not on it, we can exclude that debt for you. We can even do that on a mortgage, believe it or not. So, just make sure you follow rules like that, cause that will help tremendously. But I'm glad you brought up student loan, or you didn't, but it reminded me of student loan debt. For those of you that have any student loan debt that's out there, the nice thing about VA, is we do have to use 0.5% of the total loan debt and put that against you, as far as a monthly payment, even if you're not making a payment on student loan debt, because most payments are 0 these days. The nice thing is for VA, we can use 0.5%. Like on a conventional loan, we have to use 1% of the loan balance. So keep that in mind too, if you've got a lot of student loan debt.
Do you guys have any other questions about the products, the VA product, any other products? So just keep in mind if you guys have a VA and you wanted to refinance out into a conventional, you can also do that. So you can free up your entitlement. There's just a lot of information, you guys. I know we can't tap into everything today, but please let us know.
Absolutely.
For retirement, for VA and everything, right? I already used the VA loan twice, and I know the percentage goes up every time you use it when you're active. And when you're retired, and I use it for the third time, do I get locked in with the base rate that it was originally at, or does it still go up by percentage?
You mean on your funding fee or the interest rate?
For the funding.
There is a subsequent use fee, it's 3.15%. First time you use 2.15. However, if you retire and you have a disability rating, it goes to 0.
Oh, those there.
Not on your existing loans, you can apply,
Yeah.
but for any new loans going forward, yeah.
So I have to wait until I retire to get that 0%.
Well, to
If
get,
you-
yeah,
to get that
obviously if you're
rating.
active duty, you're not gonna have a disability rating. So if you retire and you happen to get a disability rating, with that disability rating, as long as you have 10%, you have 0 funding fee.
Because I'm planning on retiring soon, so I want to try to purchase use it the third time, but I know I'm gonna get hit with that rating of it going up.
Don't get caught up on, just do
Yeah.
it. Don't
Yeah, I
get
was
caught up
gonna
on that.
say.
Yeah, I tell
Right.
people, don't get caught up on, oh, well, you know, I get so many people that, oh, God, the rates are high. I'm like, in comparison to what?
You'll lose out on the equity.
Yeah, you continue to get hung up on the rate. Oh, I'm gonna wait till the rates drop. If I heard that so many times with people that have kicked themselves for not buying, you know, during COVID or after COVID or way before COVID. I mean, there's always that, just buy, sit on it, and then refinance. The rates are always coming down.
But keep in mind, for your ETS date, make sure you're not within 12 months, or we're gonna ask for like an offer letter for another job. Unless you're able to get a letter of intent to re-enlist. It's just something to take a look at on your LES.
But we can work around
We
that.
can work around it.
Yeah, because I'm looking at, I got a job offer, so I know I need a letter saying for the salary
Yeah.
and
Right,
stuff.
awesome.
And then I still want to use to show proof that I still have salary income coming in from the Navy. So I'm trying to provide all the documents at once so that way I can just get
You'll be
a
good.
loan.
You'll be good.
The
Even
job
if-
offer letter, that's.
Even if you just want like a snapshot of what that potentially looks like right now, just let us know. We can give you a real clear idea on how to get to that ultimate goal. Yeah, so if you guys just want scenarios like, hey, what would this look like if I did this, if I bought here, if I bought there, how about in Tennessee or in Texas or Michigan or wherever. I just want to see what that looks like for my current situation right now with my current pay, with my current outgoing expenses. So you guys know with VA, your debt to ratio goes a long way. You can go up to 60% sometimes debt to ratio in that.
As
So,
high as 65. Typically at 65, I've seen it kind of cut off. But I got an approval yesterday at 64.21%. So
alright guys, any other questions? No? No questions?
I hope this was knowledgeable and impactful for you, and appreciate you taking your time out to listen to us. And I hope you're able to use your VA benefits, and it's going to be amazing.
Yes. Alright guys,
Thank you so much.
I appreciate you all coming out. Thank y'all for coming. Like I said, hopefully it was announced. I just got a little small gift for you all. Thank you so much for coming all the way from the job.
Oh, that is so awesome.
Oh, thank you so much.
All right. I appreciate you guys. That's a blessing. Blessings on brother. Oh yeah. Oh.
Yes, you are a service member and that you're entitled to the VA home loan, which is the best because it has the best interest rate, and they'll tell you more about that. So your COE on your first home, it'll say a loan on the left-hand side, and on the right-hand side, how much entitlement was charged. So let's just say entitlement charge is $25,000. is, let's say it's 25,000. Subtract that 125 from 25,000, that gives you what? Right, now that take that 100K and you multiply it by 4. So we've got 500,000 divided by 4. We said that's 125. Entitlements charge, you're subtracting that 25,000. That leaves you with 100K. You multiply that by 4. On your next home, you've got up to 400,000. But you're like, hey, for for my second home, it's actually 500K. Can I still do it? Yeah, you just put down 25% of the difference. So where they would have given you 400, now it's 475, because you put down 25% of the difference, which is 25,000. This is where, had I known this as a 19-year-old D1, I would have purchased a home at every command I've been at, but I didn't know this until like 3 months after I retired, and I'm going through my licensing. This is where I would have, hey, I got me a condo in San Diego. I'm gonna rent it out to Patrick. Hey man, welcome to San Diego. I'm gonna rent it out to you. I'm gonna go to Norfolk. I'm gonna go to Italy, whatever, and I'll just keep renting it out to service members. And I didn't, you know what I mean? That just didn't click. I figured I had to be a khaki or maybe get a degree, and then I can do all this stuff. So if you guys have any questions on that formula, I love that formula more than anything. And I've got a master's degree. I've never learned anything like that. Other than that, ask questions, take notes. They're really going to give you a lot of information. And if you have a question you're thinking about asking, somebody probably next to you is asking the same thing, but they don't want to ask. So aside from that, enjoy. Thank you for having us. And I'll stand by in case after they're done, if you guys have any questions. Thank you.
Hey guys, I'm Georgina Bolton with the 21 Credit Team. So I've been in the business for a little over 20 years, and my favorite part about doing this is just teaching people how to invest. So I'm an investor, I own multiple properties. VA is so...
And the lowest is 3.5% down, which can be quite a bit of money if you're talking about $600,000, $700,000, $800,000 homes. Where the VA, 0 down, absolutely. What's another benefit? All right, that's okay. That's why I'm here. So the second benefit is there is no mortgage insurance for a VA loan. Okay, on other standard loans out there, if anyone puts less than 20% down, they have to pay private mortgage insurance. Essentially what that is there's no risk involved. So the lenders require private mortgage insurance, kind of like a safeguard in case someone defaults on a loan, because when you're putting less than 20% down, again, there's more risk. That can equate to about anywhere from $100 to $400, $500 extra in a mortgage payment, depending on how expensive the home is. So it's a huge deal. For FHA, as an example, if you get into an FHA loan, the factor is 0.55%. I just priced a loan the other day at $619,000, where they have to put 3.5% down, and their mortgage insurance is going to be $250. So that's $250 additional dollars that they have to pay in a monthly mortgage payment, where if you use a VA loan, absolutely 0 mortgage insurance. Huge, huge benefit, especially when you're sensitive about your monthly mortgage payment. Last, another great benefit of the VA loan is you have the lowest rates on the market. So if you look at other standard loans out there, whether they're FHA loans, conventional loans, other type of unique loans, bank statement loans, anything that's available out there on the market, the VA offers the best rates on the market. And that's also huge, because that's going to save you even more money on your mortgage payment. So keep in mind, don't buy a home without using your VA benefits, okay? Now, I do want to talk about what can you use the VA loan for and what you cannot use the VA loan for, okay? So it is only to be used for primary residence, so residence that you're going to live in. It is not used for storefront property, no commercial property, no investment property, and you cannot use buy property that's on leased land, I get this question asked a whole lot, is can I buy a mobile home on it, manufactured home on it, where there's space rent? You cannot use your VA benefits for those type of properties. It has to be a manufactured home on owned land, and you don't need to remember this, but it has to be built after 1976. And if it's got a permanent foundation affixed to the property, you can use your VA home loan. If it does not, then you can't, okay? Now, there's ways around it, and I'm sure you may know people that may have two homes that they've used the VA loan for. So what you can do is, let's say you're a first-time home buyer and you buy your first home with the VA loan, and you think, wow, that is cool, I wanna buy an additional property, but I already used my VA benefits. You can do that, as long as you have entitlement left to use. What a lot of people do is they might rent out their current home, and with a lease agreement, within the first year, we can use 75% of that income to offset your mortgage payment to help you qualify for a new primary residence. So that's another way that you can use your VA benefits and buy multiple properties. And I think Angel brought this up. So when you buy a home using your VA benefits, you're gonna get an entitlement charge on your certificate of eligibility. All that means is we use that entitlement charge to do the math that Angel was talking about up here. It goes by county. So Riverside County is gonna have a different number than San Diego County, and they're gonna have a different number than LA County. But we use the county numbers, and we use a formula using that entitlement charge to show you, hey, based on the numbers for where you wanna buy a home in San Diego, as an example, you can go up to this amount with zero down still, okay? And then if you go above that amount, you have to come up with 25% of the difference. So without giving you the calculation, let's just say that you have 600,000 available still, that you can go zero down. So that means if you buy a home that's $800,000, the difference is 200,000, divided by 4, you'd have to come up with 50,000 down, okay? And that's a way to use your VA benefits more than once. And, across the country, homes are not quite as expensive as they are here in Southern California. So there's definitely people that can use their VA benefits even more than twice. Just because home prices might be a lot lower versus areas like DC, New York, California. You can go to Florida and find a home that's a lot less expensive. Even Texas is getting expensive these days, but you can go to some other areas across the country and, again, use your VA benefits more than once and twice. Okay, so let's talk about when a down payment, can you do a down payment with a VA loan? Yes, you can, and I'm gonna explain the difference. So have you heard of a funding fee? Does anyone know what a funding fee is? Okay, so for every home purchase, unless you have a disability rating of 10% or more, you have to pay a funding fee. It is not out of pocket, it is financed into your loans. You don't have to come out of pocket for that money. But essentially, it's a charge that the VA charges each borrower so that they can keep these benefits going for future people that want to use their VA benefits to purchase a home. On a first-time home buyer, it's 2.15% of the purchase price. Okay? So if you're buying a $600,000 home, you're doing zero down. That 600,000, I need a calculator, times 2.15%. Times 2.15%. Okay, it's $12,900 that's tacked onto your $600,000 loan. So your loan is actually $612,900. Again, VA funding fee. It's not an out-of-pocket expense, but it is tacked on. So if you decide to put 5% down, that 2.15% comes down to 1.5%. And then if you choose to put 10% down, that 1.5% goes down to 1.25%. Okay? So that's how that funding fee works. Now, if you're not active duty, you're a veteran, you have a disability rating, you do not have to pay a funding fee, and you're completely exempt from the funding fee when buying a home. Okay? The other piece is, what do you have to come out of pocket for? Okay? So for every real estate transaction that's out there, you still have to pay closing costs. So while a VA loan is zero down, it is not zero cost or zero out of pocket, okay? Closing costs, to make this super simple, because I can get granular and it will not help you. Essentially, if you think about it, it's the majority of it is tied up in title and escrow fees, property taxes, and homeowners insurance, and how many months of each that they collect, okay? So with those closing costs, you do have to make sure that you've got that money available. It's typically 2.5% to 3% of the purchase price of the property, okay? So again, using $600,000, if I were to use 3%, closing costs might be close to $18,000, okay? Now, the good news is, when you're out there with your agent and you're shopping for a home, we have great things that you can use to help you as a VA buyer purchase a property. You can get seller credit. So that means that the seller is gonna give a portion of their proceeds back to the buyer to help with closing costs. So we can do that. An added benefit that lots of agents do, Angel and Ron are phenomenal at getting seller credit for our VA buyers. In fact, right now, we've got an offer out right now where we're asking for $10,000 back in seller credit to help this VA buyer get into the home, because that's huge. So instead of having to come out of pocket $18,000, now you may only have to come out of pocket $8,000, okay? Huge, huge benefit. Another thing that you can use that seller credit for is you can use it to buy down your rate. So maybe it's more important to you, you've got your closing cost money, but you really want a lower rate by 0.5%, 0.75%, just depending on where they are. We can use that seller credit to buy down the rate. Last but not least, we can also use seller credit. Let's say that when we look at your income and your debt to income ratio, and I'll go over that in a few minutes, is super, super tight, and it would really help you if you paid off a credit card, and it would help you qualify and boost you up. Only with the VA loan can you use seller credit to pay off a credit card for a VA member. We cannot do it on a conventional or FHA loan. And that can be super impactful for somebody that's super tight and almost gonna qualify but just can't quite make it, and maybe needs that $100 a month payment gone, or $200 a month payment gone, or whatever the case may be. So there's so many options out there. And then the last option is we have what's called 1-0 buy downs and 2-1 buy downs that we can use that seller credit. So like, for example, a 1-0 buy down means that, let's say you're gonna get a rate of 5.749%. You can use seller credit to buy that rate down for 1 year to 4.749. Kind of eases you into making a mortgage payment for the first year. You get a break on your payment, because essentially the seller's paying the interest on that 1 point for a full year. And then after that 1 year, your rate goes back to the normal 5.749. Maybe you anticipate getting an increase. Maybe you anticipate just coming into more money, or maybe just getting used to a big mortgage payment. You need a little bit of time to absorb what might be that extra $300 or $400 that you have to part way with. That will be easier easier for you a year down the road versus today. So does anyone have any questions on that so far? No? Yes?
Is the seller credit conversation, is that something that we have to initiate, or is that like upon, anytime anyone's applying for a VA home loan, seller credit is always?
So seller, great question. So I as a loan officer, use it when I give options, but it's really between your realtor and the listing agent to negotiate that on your behalf.
Okay.
So if that's something you're interested in, you can tell your agent, hey, I really need some seller credit. I really either want to buy down my rate, I want some help with closing costs, and have that conversation with your realtor, and then they can kind of explain that to you. It's not a guarantee. It is something that is used as a negotiation tool out there. Obviously, the seller has to agree. So typically what happens is, I'll give you an example. Let's say someone has a home listed for $600,000. You may want to offer $610,000 and ask for $10,000 back, because really the seller's only getting $600,000, because that extra $10,000 they're giving back to help you.
And I will say, so just so you guys know, so as a realtor, so we're hybrid agents, we tap into both sides. So you guys have 3 negotiations stages in a transaction. So the initial is going to be the initial negotiations, conversations that the agent will have on behalf of you and with the seller's team. So if there's a house listed for $700,000 and you guys were shooting for like $10,000, $15,000 worth of seller concessions to pay for your closing costs and maybe a rate buy down, that's something we'll negotiate on the front end. But there's 3 stages. The first stage is gonna be doing the initial investigations, which are your requests for repairs when you guys actually go into the home and say, air conditioner's not working, the roof is about 30 years old, it looks like it's getting ready to tap out, we see some stains up on the ceiling. That's our next stage. So we get to negotiate on your behalf for maybe some repairs or a seller credit. So we know that, you know, the AC is $10,000, the roof is gonna be an additional 10 grand. That's additional money that can be negotiated for your closing costs, for repairs, or just, actually, we just got that, Ron.
Yeah.
Remember you had mentioned that repairs or, energy savings can now be a part of the loan.
Yes.
So this is all stuff that can be negotiated. The next stage after that is gonna be the appraisal. Say that we're buying a house for $700,000 and the appraised value comes in at $675. That's a 50/75, right? So we can actually go back to the purchase price with the seller's team and say, hey, this is a VA loan, this is kind of a wrap, we're tapped out, let's renegotiate. Most of the time we can help bring that down. So if you guys have an agent, or if you guys decide you have questions, that's all negotiated in advance. So just keep that in mind.
We need a chance, do you mind popping that back up? I wanted to get to the screen that talks about BAH. Alright, give me just a minute. So, I'm gonna use my pen calculator. So let's talk about BAH. Okay? BAH is such a huge, huge benefit. That's money coming to you for your service. Use that BAH to invest in your future, because you're not gonna get BAH forever. So let's just say that you're getting $3,600 a month in BAH. My goodness, take that money and instead of putting it in rent on a monthly basis, and you're going to have to make up money. You're not going to be able to get into a mortgage of $3,600 right now. But what a help that, you know, the rest of the world doesn't have, because that money is so valuable. $3,600 a month times 12. That's $43,000 in 1 year. where if you were putting that towards rent, you're never gonna get back. But if you use that towards a home purchase, 10 years down the line, if you're out of the service and no longer getting BAH, that initial home investment, you used a portion of that government money to help with your mortgage payment, and now you may have $200,000, $300,000, $400,000, $500,000 worth of equity in your home that is yours to keep forever. So it's such a huge benefit. Oh yes, I've got, so these are 2024 figures, E2 through E4, $35.79 BAH per month, E5, $38.82, and E8, $43.53. Huge benefit. And then when you break it down per year and then per years in rank, we're talking $85,000, $186,000, $261,000. Don't waste that money and put it in rent where you'll never see a penny of that back. Take that money, invest in your own future, so you protect that money that you're getting. So down the road, you're the one that's earned all that equity. Even if you turn around and rent out your home, because I know that everyone can get a lot of rent for properties right now. Even if you wanna do that, rent it out. Have someone else help you pay your mortgage for you. And that way you're keeping your own money and investing it in whatever you choose. The most important piece is just investing in that real estate for yourself later down the road. It's such a huge benefit and also brings security to a lot of people. So I can't stress that enough, and I just want to make sure. Yes, and then we break it down on owning versus renting. You want to talk about this? Perfect.
Okay, where are my renters? Oh my gosh. Okay, who's paying above $3,500? No? But you're close, right? Okay, how much are you paying roughly?
It's based on the
Okay, so let's say you're paying $3,500. So I love to put this on the big board because when you guys actually see the numbers, it turns your bellies. So if you're paying around, say, $3,400, the first year you just dropped $40,800. By 5 years into paying a $3,400 rent payment, you've dropped $204,000 in rent. So I love talking about this because I'm an investor and I love tenants, and you guys are creating generational wealth for me and my family. So thank you. But the point is to teach you guys how to do this for yourself, right? You have this amazing VA product that you can leverage. So let's just say that you were stationed here and you bought a home here and you have the opportunity to, you got shipped off maybe to Florida, North Carolina, and you got stationed out there. You turned around and you rented your property. Right now, we know that San Diego is one of the most expensive places to live in the nation, right? So rents are super high, they're over $4,000. So if you guys rented your home, even if you paid a difference in your mortgage payment, let's say your mortgage payment was $4,500 and you were dropping $500 of your own money, you're investing it into your home. Because there is no investment that's gonna give you the same rate of return that you're gonna get in a home in equity and appreciation over time. So I don't care if it's a 401k, I love that you guys love to dump as much into your TSP account, but you can't touch that money until you're 65 and older, right? So you wanna be able to have money equity available, so when you wanna tap into it or when you wanna sell it, you can use that to invest into another home. So it's all about creating more additional income. So if you guys were to have a home here, you rent it out for $4,000, buy another home in Florida, you stayed there for a short, stint, and let's say that you were there six months, you made 6 payments, and you guys got stationed in Hawaii. You want to buy a condo in Hawaii? Guess what? You can actually reuse your VA, but as long as there's entitlement,
that time, it was the height of the market. It was a great time to invest. They had products that were available that are not available now, that were stated income programs that allowed me the opportunity to buy multiple homes. So what I did, I leveraged these homes and I had tenants in all of them. Well, market crashed, as we know, back in 2010. I was able to sell some of the properties and keep some of the homes. My goal was to keep the homes long-term. Okay, these are not short-term investments. So as long as you have that mindset that investments aren't all about flipping. I mean, that's a different product if you're looking at flipping in the future. But if you keep that mindset that this is gonna be long-term, appreciation over time will pay you back. So one of the homes that I had bought was near a major university, Chapman University. I don't know if you guys have heard of that. It's in Old Town Orange. It's a sweet old town, and I bought, a great house for $650,000. Cute little craftsman. I hung on to that investment for about 15 years. Once that time came and I was done, I said, you know what? I'm gonna sell it. But I told myself that I'm not gonna sell it if I can't get the number that I want. So I, said, let's just shoot for $1 million and see if I get it. Well, I ended up getting 1.1 for it. I sold it, took the remainder of what I had available, which was almost $600,000, and I reinvested it into another home. Bought another home, sat on that. I've had it rented out. My mortgage payment is only $1,500. I rent it out for $3,600. Now I'm kind of at that point where I don't think I want to be a property manager anymore, and I'm getting to that point where I think I'm gonna sell it. I sat on it for 2 years, and in 2 years I've appreciated at least $100,000. So there is no other product that's gonna give you that same rate of return than a home loan, because we know California is only getting more and more expensive. So keep in mind, just look at this as a long-term investment. Now, you can look at different states. I've been looking into Michigan for different clients. Tennessee, I just went to Tennessee 2 weeks ago, and oh my God, I fell in love with Nashville. Love that town. Great location for investing, for Airbnbs, anywhere near a major university or a military base. You guys will not go wrong. So always keep that in the back of your head. If you're stationed and there's homes available, they're usually affordable because we have a big turnover in military. Buy a home there. Sit on it. Don't go buy the most expensive Camaro, because we know that young Navy people love nice cars. Think long term. Buy a home and then invest into a car later. But make sure you guys get into your home first, and then you guys can go after all the blingy stuff later. So if you guys have any questions, I'm here to answer anything for you guys. Back over to you, Hannah.
Alright, so speaking of buying your completely car. So I'm gonna talk about how you can prepare your credit to buy a home, okay? So there's some really important things that you can do. So the VA does not like lates, okay? And we're talking 30 days or more late. So if you have a credit card and the payment's due on the 10th of every month, and you sometimes miss it and you make it on the 15th, that's not what's gonna damage your credit. It's 30 days or more, okay? Do not have a 30-day or more late payment on anything within 12 months of you wanting to purchase a home. Otherwise, there's gonna be a lot more work on your part, a lot more letters of explanation. The VA does not like late payments within a 12-month period. So that's one thing that you can do. The next thing you can do is make sure that you move as little money around as possible within like a 2-3 month period that you're gonna purchase a home. It makes your loan go so much smoother, so much quicker, less headaches, less paperwork that you have to provide me as a loan officer, okay? Also, when you purchase a home, people get excited, they get an escrow.
So the key is to be open, receptive. I'd like to educate people on how to use their credit and really leverage
the equity that you have to be able to invest in long-term products. So most of you guys will learn within the next hour how to use the VA. So thank you guys for being here and being open. We're excited to share with you guys how we're going to make this work. So, Juliana?
All right, good morning, everybody. Again, thank you for having us. So I'm going to talk about the VA loan. I'm a loan officer. My specialty is the VA loan product. I've been working with VA loans for over 5 years now. I've done a lot of VA seminars, and it looks like most of the room is going to be made up of first-time home buyers. So let's start with the basics. So does anybody in here know what the benefits are of a VA loan? There's 3 specific ones that I want to make sure.
And my favorite part about doing this is teaching people how to invest. So I'm an investor, I own multiple properties. VA is so valuable, you guys.
It has to be a manufactured home on owned land, and you don't